Alright traders, I'm back again with another video, and in this video I'm going to show you how to use the Williams percent R to refine your Ichimoku trades. So trading with Ichimoku is a very great tool. It really helps you to understand the bias and direction of the market, but Ichimoku doesn't give you exact entry signals. Now, depending on how you trade it, you could use a TK cross entry, but sometimes those cross entries you have such a big stop. So we want to refine our entries and find how to trade using the Williams percent R with Ichimoku. So the way that we trade here, we need to have a few things to trade. So we have to have a level, a signal, and a trigger. So basically the level, we're going to be using Ichimoku levels to enter our trades, and our signal and trigger is going to be based off of the Williams percent R, and I'm going to talk about how to enter into those trades as we move on. So let's get started. So Larry Williams is a legendary trader and developer of internationally known and prized indicators such as the Williams percent R, the Williams accumulation and distribution, and more indicators. Williams is the author of 11 books, mostly on stocks and commodity trading. Larry's work and teachings are valued by traders worldwide. Today we will be focusing on the Williams percent R, which Williams developed to see where today's close was in relation to the range of the last X time periods. So the X would be the time period that you have your settings for the Williams percent R. So normally you'll probably see a 14 period Williams percent R. So that's what that X would stand for. The indicator helped Williams turn 100,000 into 1.1 million in 12 months and helped Larry win the 1987 Robbins World Cup Trading Championship, trading with real money. And then 10 years later, his daughter, who is also actress Michelle Williams, she won the same contest with basically the same strategy based on the Williams percent R indicator. So the Williams percent R is very similar to the RSI and stochastics, so it shouldn't be used in conjunction with them. It is used to identify the oversold and overbought levels and the proper entry points. The default settings for Williams percent R are set at 14 periods, but Larry used a setting of 4 periods in some of his trading strategies. We're going to be using the setting of 5 periods in our trading strategy. So the Williams percent R is a momentum indicator with values that move in the range of 0 to negative 100. Values below negative 80 means that the asset is oversold and its value will probably rise. When the value starts to rise above that negative 80, this shows that the downward momentum is weakening and the bullish strength is developing. And we're going to use that to our advantage. So values above negative 20 mean that the asset is overbought and its value will probably fall. So when the value starts to fall below the negative 20, this shows that the bullish momentum is weakening and the downward strength is developing. We're going to use this concept and to our advantage, and it's going to be a way for us to enter into our trades. So when the indicator is near 0, it shows the price is trading near or above the highest high during the look back period. So the default period, as I said before, is 14, but as I said, our case it's going to be 5. If the indicator is near negative 100, the price is trading near or below the lowest low during the past 5 periods. And if it's above negative 50 and the price is trading within the upper portion of the 5-period range, below negative 50 and the price is trading in the lower portion of the 5-period range. So here's the formula used to calculate the Williams percent R value. Percent R equals the highest high minus the close divided by the highest high minus the lowest low times negative 100, where the close is the closing price for the current period. Highest high is the highest price reached during the look back period, which would be 5 for us. And the lowest low is the lowest price touched during the look back period. So this is all based off of momentum, and that's something we really want to be in. We want to be a momentum trader. So the Williams percent R offers different types of trading strategies such as overbought and oversold, divergence, and swing failures. So here on the chart you could see this above the negative 20 we're overbought. You can see this is the negative 20 level here, and this is your negative 80 level where we're going to be below that negative 80 we're considered oversold. So I'm going to be going through these slides, and then at the end we're going to go through some markets. We're going to try to look at um, we'll do some markets on Forex. We'll try to look at some crypto and stock markets, and I'll show you how this thing works with all these markets, and you can trade the same concept, basically what I'm doing right here today. All right, so here we're seeing these arrows, these red arrows, and then these green arrows. So we could see where the levels are overbought and oversold. All right. So the red levels are where we're overbought, and the green levels are where we're oversold. So you could take trades on these levels. But if you took a trade on each of these levels, you would probably be a losing trader, because you don't have a way to signify which signals are relevant. And that's what we're going to break this thing down to. We're going to decide which signals are relevant and when to go into a buy or a sell. So using the Williams %R, you could also find divergences, and that's something that we would trade. So things that we look for and things that we trade are divergences, and using the Williams %R. Now, I don't use Williams %R a lot for divergence, but it can be used for divergence, as you can see here. Williams %R was still going down. Price was still going down, sorry, and the Williams %R was rising. That was a divergence. This is a good sign at a support level, and then you can see the market went higher. And then we're back to this, the same support level where the market is flat, reaching the same level, but the indicator is aiming to the upside, showing you again bullish divergence, and then the market takes off and goes to the upside. So how would we have entered that trade? You're going to see how we would enter these trades. Again, you can see this as bearish divergence, where you have the market flattening out at the top. So it's very good to use these divergences at resistance and support levels, and that's basically what we're going to be doing. And then we're going to add the indicator to help us to decide when to get into the market. Now, this is a divergence situation, and we're not going to be looking at much divergence today. We're going to be looking at strictly how to take a trade based off of entering from our level. So you could also use the volatility stop with the Williams %R to help you to get in some very great trades, all right? But we're not going to be using that. You can also use this for a stop loss too. You can use moving averages to help you to get into some very good trades using the Williams %R. And I really love moving averages. Basically, that's what Ichimoku is. It's nothing but moving averages, but set a little bit different, you know, not set on the close. Then you could also use trend lines. Trend lines are very good for what we're going to be talking about. Support and resistance, one of the best things that you could learn and do and trade. Williams %R will help you to take some nice support and resistance trades off of range levels. And then fractals. I think fractals are, for me, my biggest and best tool to use to get into the market. I use fractals in a variety of ways. I could use fractal bounces and fractal breaks. Those are things that are going to get me into very good trades and help me to trade with the trend and the strength of the trend. And I'm going to show you how to use Williams %R to get into those trades with the fractals to make your trade even a higher probability trade. So basically, Williams %R is going to give us a higher probability trade. You can also use a lot of price action, and that's where we talk about trading at our levels, where we're going to start using these price action entries. So we can use inside bars to enter the market using the Williams %R also. So we would develop that and put that with our sign, our entry sign from the Williams %R. As you can see, inside bar reversals. All right, and the market reverses on these inside bars. Then you have outside bar reversals. You could use these also. You could see another outside bar reversal. The market was moving higher, retraced, then moved higher, had the outside bar reversal, and then the market dropped to the downside. Then also Williams has a technique that he uses, which is called the Williams Smash Day pattern. And here's the pattern. I'm not going to get into it much here, but here's your sell level. The pattern developed right here, and then you had a sell here, and it was a good trade. The same thing here, Williams Smash Day pattern, sell here, nice Smash Day pattern, and the market dropped to the downside. So those are good things that you can use with the Williams %R, or just basically with your trading. You don't even need to use Williams %R with some of these things. Basically, we like to just have support and resistance levels and use these price action entries that I'm talking about. All right. Now, some traders need some things to trade, such as Ichimoku or some kind of a system. So therefore, I'm going to be showing you Ichimoku today. Now, for the things that I just talked about, if you're really interested in learning more on how to trade those price action entries along with the Williams percent R or at levels with support and resistance, then visit my site, because right now, if you go to my site at www.fxatOneglance.com, you can become a lifetime member for ever. A lifetime member includes everything that I have on my site, every course, every video, every trade setup, trade alert that I send out, you will get for the rest of your time here on this good earth. All right, and as long as I'm here, basically. All right, but that's something that I'm offering right now. Don't know how long it's going to last. I had it out for a little while here, and I'm still going to keep offering it for a little bit. And then when I close it up, I'm going to close it up for a good while. Won't be back for a good time. So that's an opportunity to jump at that, because we have a lot of things. We have weekly webinars. This week we're going to have a webinar. We're going to be talking about this same thing, but we're going to be more in detail with it. So we're going to be talking about, we have Sunday webinar that we have every Sunday at 5 p.m. Eastern Standard Time. So, and if you missed the webinar, they're all recorded, and you could go back, look at all the archived webinars. I have educational videos. I have courses. Have a trading room. Not a trading room, sorry. I have a chat room, and I have a forum. So all these things that you can use, and then I send out trade setups basically when trades are relevant. All right, but all I have to do is really show you and mention what trades I'm looking at, and you will be able to see exactly what I'm looking at. If you become a member, you'll know everything that I'm looking at, because you're going to pick up the concepts that I'm using and understand this stuff real easy. So that's an opportunity for you to do that. But let's focus on what we're looking at today, learning how to trade the Williams percent R using Ichimoku. Now, again, if you become a member, I'm going to show you even more ways to use this. I'm just going to show you one of the basic ways, but it's one of the better ways to use it with Ichimoku, okay? So again, visit my site, www.fxatOneglance.com, and become a lifetime member. Right now, that's $250 for life. Can't beat that. Can't beat that when you see the things that I'm offering. All right, so then again, I was talking about these entries here. I said that you wouldn't be able to take every entry here, because you would probably be a losing trader. So how do we decipher which trades we want to take? All right. Our tool that we're going to use is going to be Ichimoku. Ichimoku is going to help us to decipher which trades we want to take. All right. So we're going to be using our Tenkan-sen and our Kijin-sen to get into the trade. So basically, you're going to be looking for Tenkan-sen and Kijin-sen bounces. Now, this strategy that I'm talking about is more for a trending market. And if we were looking at the market ranging, we would still use the Williams percent R, but we probably wouldn't use Ichimoku. Okay. Because you're going to have crossover signals that don't really matter or that aren't really relevant, and it's going to probably whipsaw you on your trades. All right, so let's see how we're going to trade this. Let's look at the things we're going to look at. We're going to be focused on this Tenkan-sen line, this green line. So the Tenkan-sen, I'm not going to get deep into the Ichimoku concept, because I have a video on YouTube here that you can watch. It's Ichimoku for beginners, or Ichimoku basics for beginners, or whatever. But we're looking at the Tenkan-sen line here, this green line. This is going to be one of the tools that we use. This is great for trending markets, and what we want to look at is this Tenkan-sen is the highest high plus the lowest low divided by 2 over the last 9 trading days. So this is like a 9 day or 9 period moving average almost, but it's just based off of the highest high and the lowest low, not the close. All right, so the Tenkan-sen is an average of the highest high and the lowest low over the last 9 periods, and it's primarily used to measure your short-term momentum. All right, and then the next thing we're going to use is this Kijin-sen line here. All right, this Kijin-sen is the highest high and the lowest low. Same thing as your Tenkan-sen. It's divided by 2, but it's over the last 26 periods or trading days. All right, as Tenkan-sen was the last 9 trading days. So the Kijin-sen is the average of the highest high and the lowest low over the last 26 periods, as stated. The Kijin-sen is primarily used to measure momentum. Since it is a longer time period than the Tenkan-sen, it's also a reliable indication of your trend direction. All right, so a flat Kijin-sen indicates a ranging market, and the Kijin-sen angulation indicates a trend. Now that's the same with Tenkan-sen. You're going to get an angulation on Tenkan-sen to represent the direction of the market pretty much. Now there's divergences between Tinkinson and Kijinson, but we're not going to get into that. All right. But when you have angulation, now you see you got a flat market here because Kijinson is flat, Tinkinson is flat. You really don't want to see that. All right. And that's not what we're going to be looking for. We're going to be looking for the trend. We want to see angulation on both of these. All right. That angulation represents momentum, and it's the strength of the trend, and we want to be trading with the strength of the market, and this is what's going to help us to get into that. All right, so the things that we're going to need to see these TK crossovers, which is a Tinkinson Kijinson cross. So that's going to be when Tinkinson crosses your Kijinson from below to above. This is a bullish sign. And then we're going to have a Tinkinson Kijinson cross when Tinkinson crosses Kijinson from above to below. This is a bearish sign, so we went above to below. That's a bearish sign. So if you got a bearish crossover or a bullish crossover, that's going to be the way you signify which trade you take. All right, because if you got a bearish crossover, you're going to take all bearish signals on your Williams percent R. And if you got a bullish crossover, such as you would here, then you're going to take all bullish signals on your Williams percent R. So I want to show you how that works out. Basically go through with a back test and show you how that looks, and show you the trade setups and opportunities and how they work, and see what goes on. So let's continue on. From here we'll go to the live charts, and we'll just we'll look at that, and I'll show you how to trade the Forex market. I'll try to do some crypto, and then I'll try to do some stocks, and then I'll let you get on out of here. Won't waste too much of your time. All right, so let's go straight to the charts. All right, so we're here with the charts. We're going to back test this strategy, see how well it works, see if it's good or not. All right, so the thing we're looking for now is we're going to trade bounces off of the Tinkinson line here and the Kijinson line. So that's all we're going to worry about today. All right, so whenever you get a crossover, so this is a TK crossover that's bearish, you want to look for short trades, which means when this Williams percent R goes above this -20 level right here, you don't get into the trade yet because that's still momentum to the upside, and we're trading with the trend, so we want to see the bearish move. So then when it starts to lose momentum here, all right, because it's going to lose momentum once it drops below the -20. But then again, don't forget that just because it drops below the -20 doesn't mean that it won't go back up again. And then sometime it goes above the -20 and stays above that level, or below the -80 and stays below that level for quite a while. That's why you need to wait for it to close. So we're going to, right now, since we got a bearish crossover, right, we're going to look for short trades. You could see the market's going to the downside. All right. So when I'm looking at Ichimoku, I could see here at this point I would start to be wondering and worried because I got a thick cloud that's flat. Now you're going to start to see a cloud roll over. If it starts getting flat like this and thick, then it's got a lot of volatility. Then you could see this start to roll over. That's a sign that you're probably getting a change of direction in the market. So that's just a little thing that I look for when I'm trading with Ichimoku. So let's let this thing roll. So we're going to be here a little bit because we're going to let this roll. We're going to just trade with the market. So we don't have any opportunities at this point because we didn't. Here I could have taken a shot, but I wait for it to go above the -20, and it didn't go above. Now it went above the -20 level, and I'm going to trade if it closes below on the next candle. So this candle kind of signals to me that, hey, the next trade, if it goes below that level, below that -20, we want to take the short trade. And now it went back above again. All right, so now we would just be sitting patiently waiting, because I'm not going to trade unless it's at my level. I'm going to trade the support and resistance levels. So I'm not just going to take a break just because it breaks. If it comes above this level, then it drops back down below the -20. I'm not going to just take that trade. So we'll just watch and see what it does. Okay, now it broke below. So what I'm going to do is I'm going to put an entry order below this candle or below the previous candle, and then see what happens. Okay, so we didn't get triggered. We didn't get triggered. The market continued to go higher. And remember what I told you about these clouds. When you see a thick cloud like this, because see, you could see the market coming to the downside. All right, and you could see the angulation, but you could see as the market gets closer to becoming bullish again, this gets wider and wider, and you start to fall out down here. So you start to get that accumulation down here, and then the market, you could see where it's starting to roll up a little bit. You're thick here, real thick. You're flat. That's a good indication that you may be changing direction. So now we got to sit on our hands and wait because we weren't triggered. And if we would have gotten triggered, we may have lost that trade, but we didn't get triggered. So you put your entry here, or you could put it at the second candle. All right, I like to put it at the candle that triggers this. Now we just broke back in, but then we went right back above. Remember what I told you. All right, so now let's watch this thing. Oh, big sign now. We got its crossover, TK crossover, and it's a bullish crossover. Now we're going to look for long trades, right? So our long trades, we're going to look for when the market comes when the indicator, the Williams percent R drops below this -80, and then it comes back out. We're going to take the long trade at that point. But we want to also make sure we're at our levels, all right? So let's let it go. So we're waiting for that thing to go below that -20, and we're going to see where we are. Now, we're going to take this trade long. All right, you know why we're going to take this trade long? Because the first move above, once you get a change of direction, that first pullback usually doesn't reach that -80 or -20 if you're in the other direction. So I would have taken a trade there, but let's let it roll. All right, so we'll negate that trade because I didn't talk about it and didn't realize it. So we won't take that one. That would have been a good one though. So we're looking for long opportunities. Okay, we broke above. All right, so we just broke below and we broke above. I'm going to put an entry order above this level. All right, right above this level. Now you can see what I told you about when you get a thick cloud and then it's real thick like this and it starts to roll over. You can see you got a crossover and then the market went higher. So that's something you look for with Ichimoku, period. Doesn't matter what you're trading. All right. Now let's see what happens for us. We're stopped out on this one. Okay, so now we're still looking for long opportunities because we got a TK crossover. So we got stopped out. You could see that this doesn't work all the time, and it's something that's not going to always work. But let's keep it going. See how it does. All right, so there's another entry right here. I'm going to put an entry order above this level. This candle closed above. I'm going to put an entry order above that level. Now, I didn't talk about stop losses and everything, and we would have been all right on this trade. Now, how do you look to get out of this trade? So there's a couple things you could look at, and since the market's moving like it is, it's hard to explain. And I'm not going to get deep in how to get out of the trade because there's a lot of ways you could get out of the trade. You could go to the 4-hour and monitor that and get out of the trade as you watch for stay 2 candles behind the current price and put a stop loss below that level. Or you could do 2 candles on the daily, but then you'd lose a lot of your profit sometime. Now you could also shoot for a level because you knew that when you entered right here, and your stop loss is going to be below the candle wick that you enter above, all right, that you enter. So we also would have put a target here and a target here. We would have seen which level, and you can see we got a big rejection, so you probably might have wanted to think about taking some of your profit. Now let's let this thing run because we took that trade. So we want to see some opportunities in the market. Now we're not going to take that short opportunity there. All right, and now the market drops below again. And now we're getting a crossover. So now we're going to be, we're probably going to be trading to the downside now. We're going to be bears in the market. We're going to trade short. Yep, because we got the crossover. Now let me explain another thing about Ichimoku. When you get angulation like that tight together on this, so you got deep angulation with Tenkan-sen and Kijin-sen. Once you see that, especially at a break level, you take that trade to the downside or upside, whichever way that angulation is, especially when they are together, because that's usually going to be a good 2 or 3 candle run. Now, not always, but sometimes that's a good sign that you have strong momentum to the way that the angulation is at that point. So angling to the downside both together, that's strong. Angling to the upside both together, that's strong. So now we're bearish. So we're going to look for bounces when the market comes above this -20 and breaks back below. All right, so we're 1 for 1 at this point, really. Actually 2 for 1, right? All right, so now we broke back below. I want to put an entry order below this level right here with a stop loss slightly above. So I don't have my tools to draw right now because I got a full screen, but I would put an entry a sell stop slightly below this level. I'd have a stop loss above this level, and I would just sit in my trade, let it go. So let's see what it's going to do. All right, so we're getting profit there, and we made profit. And it looks like we're good. We made some profit. The market hasn't come to our stop loss, so we're good. Now we're going to watch. All right, see that? We broke to the downside. Nice trade. And it continues to be good, a really good trade. So now you could really monitor your trade, and you know you made some good profit. There's a lot of ways to get out of your trade. Now we're back at our level. All right, back to our level. We broke above the -20, and then we broke right below on this candle here. Put your sell entry right here, sell stop right here. Put a stop loss slightly above. This flat cloud kind of scares me because the market likes to pull back to it. So I'm going to put a little bit distance on my stop loss, a little bit. Now make sure you can afford the distance that you put on your stop loss. You have to have a technical stop loss. So you want to be at least above the wick of the candle, and you want to give it some room because the market likes to come right back to that level. So we're putting a sell stop right here. Stop loss slightly above. All right. So our last trade was pretty good. And let's see what happens here. So now we're in the market. We got triggered right here, and we're making profit. Big rejection. Now look. All right, so see, we're making good profit here. Now here's a way you could get out, but sometimes this takes some of your profit away. You can see that candle entered. The same way you got in is the same way you get out, the opposite way. So you would take your profit now, and you would have made good profit because that's a daily time frame. That's one way that you could do it. There's so many different ways you can talk about getting out of the market, so I'm not going to discuss it at this point because there are so many different ways. We're above the level, and we're above that -20. So that's strength to the upside, but the market is bearish. So the true strength is to the downside. The correction is strong, but once it loses its momentum at that point, we want to be in the market. So we're above, and we're at our level. We're either going to be trading this Tinkinson unless the market comes up higher. We're going to be looking to trade that Kiesenson. All right, we're right at the level. So let's see what this market does. We're short. We want to be short. This candle closed, we're short because the candle closed, it didn't even give us an opportunity. It closed right here. So we're taking this close right here. We're going to enter the market at that point, and we're going to have a stop loss slightly above that level, and we're in the market right here. And let's see what the market gives us. And we got profit. Now see how I told you you could take your profit right here? Well, you don't make much profit if you do it like that. All right, so we don't want to do that. So I think I am messing up here. Yeah, there we go. All right, we're back. This internet is crazy here for me sometime. I'm using my old computer because all of a sudden my brand new computer, I don't know what happened to it. It died. It seemed like the hard drive died and had to send it back. So crazy right now. But anyway, you could see we made profit. But again, that's why I don't like trading that way, because we would have entered here and got out here, you could see. So that wasn't much profit, but we would still be in this trade. You would have probably taken some profit, try to look where the market is. But it looks like a good move because we're still got that TK crossover that's bearish. All right, so that was one entry. And you could see you probably would have got out somewhere in here. You wouldn't have followed this. I don't think you would have had the cojones. All right, we're above this level. All right, So we're at the Tenkan-sen. We either want to be the Tenkan-sen or the Kijun-sen. We're inside the TK zone. All right, we're in this trade. We're going to put a stop loss entry here. All right, our stop entry, buy sell entry right here, and a stop loss above the Kijun-sen for me. So let's see what the market does. And it takes off good for us. All right, because what's really happening, guys, is that we're following the direction of the trend, and these corrections aren't where the real strength is. So that's why it's not staying above that level long. But if the change comes in the market, then you'll see the way that the market is moving is where the change is going to stay stronger. It'll stay down here a little longer than staying up here, you know, because you're just correcting right here. And that's what we're playing. So we got another good trade. And it's all about patience. Go to another pair, look for something else if you don't have what you're supposed to have for this trade. So this would be how you get out right here if you were following, just going back on the -80 level. And you would have made good profit on this one. But I don't like doing it because, again, I told you, you lose a lot of your profit. So we're watching the market, watching to see where we go. And we didn't. Right now, this is a sign again. You're starting to get a little thick here. Now I'm inside my TK zone. This is one of our usual trades that we usually would take, but based off of the indicator, we're not taking this trade. Now what I'm starting to see with the indicator is, look how high we were on this move here. We came above the -20. Then look at here, we came above the -20, but not much, and now we didn't really come. All right, so you're starting to see that momentum failure to the downside. Now you're starting to see that weakness, and this downside move could be coming short. So I'm going to start looking at divergences also, and I'm going to look for my support and resistance levels, because if I had a level down here somewhere, I want to watch to see that. So you always want to draw your levels, right? Your support and resistance levels, because if you have your level on the chart, then you know when you get down to that area, you may have problems and the market may not go through there. Now I didn't mark a level here, so we're just going to continue to trade until we get to our current day. Now, you could see we didn't get an entry here because we didn't go above the 20. And this would be something that I always look at, because we do like trading these pin bars, the rejections here. All right, and so now we went above the -20 here. And now we're entering the market. So we went above the -20. We're going to enter the market here on the close. Now you could also, you don't have to enter on the close. You could enter at the low. But I mean, you can just trade the close because it helps eliminate some of your stop loss. And I'm going to move my stop loss up to this level, a little bit above the Kijun-sen. That Kijun-sen is like your trend line, all right? And that's going to be something that you use for your stop losses. And you can see how we had a couple bounces off of that level. So let's see what else we get here. Okay, and we didn't make much profit. We got stopped out. Okay, so we got stopped out. Trade didn't work for us. And I told you, it looks like the market's trying to change direction. And we didn't get much of a move to the downside. And now the market goes right back. I did tell you something if you watched me earlier about trading inside bars, all right? So I'm not going to discuss that one here, but there's opportunities to trade like that. You got an inside bar right here. And then the market drops. All right. So we got stopped out based off of the indicator giving us an entry here, and then the market went higher. So it gave us an entry and then it went higher. But then we had an inside bar like I was telling you, and that inside bar shows that this move here was not true. There was no strength in this move. All right, so basically, really, you know, your institutional traders are more likely not taking this trade. They're moving this to the downside, and you can see we got that move to the downside. Good trade. Had we trade the inside bar move here that we discussed, that we showed on the earlier in the video. And so we're going to continue because our crossover is bearish, so we're still going to trade to the downside. Now you can see this stays below this -80 for quite a while when you got strength to the downside. All right, so you do have strength to the downside here. And then now it shoots up. So had you traded like we were talking about, again, you could have taken your stop loss here, I mean your profit here, but sometimes that eliminates some of your profit. So you have to decide if that's something you want to do. You could go to the 4-hour time frame and try to do it, but I think when you go to the lower time frame, you're going to get a little bit more whipsaws coming back and forth. All right, so here's another possible opportunity, but we need to be at our level. All right, so we're reaching to our level, and we are at our level. We're at the Kijinsen level. Now, why is Kijinsen coming down when the market was going up? That's something I don't like to see happening. All right, Kijinsen should follow the direction of the market. This was going down. Kijinsen shouldn't have been coming down at this point. So let's see what's going on here. Okay, so now we're going to put an entry right below this rejection here. So this will be something that we look at trading anyway without the indicator, period. And we're triggered, so we're making a little profit here. And more than likely we're stopped out. Yep, stopped out now. Now you can see that we're starting to get this crossover maybe. Let's see what the market does. Another inside bar here. All right, but we don't have our signal like we did previously. But we have our level. And trading the inside bars at the levels is something good. So you would have made some profit that way. But based on our signal, no. And that's where the market ends. That's where we are. So that's what we got. You could see we had some really good trades if you follow this. Some very good trades. You got to be patient and wait for that. But you could see how this indicator alerts you to which way to trade and how quick to trade. And these are just corrections, and then you're going right back with the strength of the market, which is down. So therefore it doesn't stay above that -20 that much. So let's go look at, since we're done here, let's go look at cryptos, and then we'll try to do a stock. So I'll look at one cryptocurrency, and then we'll look at a stock, and then I'll be done. All right, so let's see how it works for the crypto market. All right, we're back. So we're going to try our strategy here with the cryptocurrencies. So we're just going to use the BTC USD. I'm going to stay on a daily time frame. Remember, you could use this strategy on any time frame. It doesn't matter. You can go down to 1 minute if you want to, 1 second if you wanted to. All right, it's going to be the same thing. You're going to use and do the exact same things. All right, so you got only thing about this strategy, just have to be patient, and you don't really have to do much. You just have to pay attention to the market, understand the direction of the market, and then this is going to help you get the direction with your crossover. So currently we got a bearish crossover, so we're looking to sell the market at this point, right? So we would sell here. We would be in the market right here, because still we're following this TK crossover, okay? So we're going to trade the direction of the crossover. Now, violating this level is something that I wouldn't like and probably wouldn't trade. So for me, I'm not going to take that trade. I wouldn't take the trade. I don't think you just take every single trade that comes your way. You have to be discreet about something. So let's get this thing going. And that would have been a good trade anyway. So we're trading. Now it looks like we got a crossover that's bullish. So now we will be going to the upside, but we don't have a signal yet. Now we got another crossover. So we got a lot of volatility happening here. So it looks like we're bearish. Now we're trading the TK crossover bearish to the downside. All right, so we're following this basic trend, it looks like. So another way, I can put a trend line here and follow the trend line bounces instead. So what I would do is put a trend line here, and you can see once you start bouncing on your trend line, you would follow the same thing that we're doing here. Now let's follow our trade. I really want to be above the level. We slightly broke above, slightly. So I would be in the trade here, or else you got to be discreet and maybe you don't take that one. All right, but anyway, the trade direction is bearish. And with that move, we made some profit. All right, we're above the level. We're above that -20, and we're right at our Tinkinson level. So we're flat here too, so that means we don't have much momentum in the market. We're kind of flat with Tinkinson also. So not a lot of momentum in the market right now, but we're going to take a short trade here if it pulls back to the downside. I'm taking a short trade right here. I like to put my stop loss above these fractals. Now you have to wait to see if it's too big for you to take that stop loss, but if it is, then be slightly above the highest wicks in this area here. All right, so we're short here right at this point, and we made some profit here. Now the way I told you could get out, you could see you'd be out quickly and you would just made that profit there, but I don't like to do it that way. But that's one way you could do. So there's so many things we could talk about stop losses, and you can see this trade still would have momentum in it if you didn't get out of it, and it still continues to go to the downside. All right, so we made a good entry here, and look at what we could make quite possibly. All right, so now we broke back above. So we're still looking for a short trade because we got our crossover right here that was bearish, and that's why we took this short trade, and we had some good profit there. And then you could see we're above the level. Now we're below the level. I'm taking the entry here. I'm going to put a stop loss up at Kijinsen. Now if that's too big for you, make sure you can put it at the Tinkinson, at your rejection wick here, your little wick there. So I'm short in the market right there, and I'm stopped out. And now the market changed direction on me. All right, you could see the market changed direction. We got a TK crossover that's bullish, sorry. So we're trading now to the upside, it looks like. Yep. So we're patiently waiting here. All right, we're going to take a long trade right here. All right, we're going to enter long at this point. All right, so what I would do, this candle closed right here. I put an entry above that wick. I like to be below the Kijinsen. If that's big, make sure you could stay below that wick right there. And it looks like, depending on where your stop loss was, you would either got stopped out. You could have made some profit here. So depending where your stop loss was, you would have maybe got stopped out, but you could make profit if you put your stop loss where I stated. All right, so now again, we broke below. We're bullish here. We want to trade off of the bounces here. So we broke below and now we're above. Let's go to the next candle. And we're not in a trade. And we're getting a crossover, it looks like. Yeah, we're getting a crossover. So look at that, nothing in the market. Now we got the crossover, and we didn't reach all the way. So that first pullback usually goes to that 50 level, like I was telling you before. And I probably wouldn't have caught this trade myself. But when I look at that and it didn't pull back all the way because we were close to our level and we're only at the 50 level. So now we're going to expect to see it move up farther on our next trades. And the market continues to go to the downside. So now we're going to be looking for a short opportunity here. All right, so we're inside that TK zone. Not a strong trending market, so you also want to pay attention to what the market's doing. Draw your support and resistance levels, because you could be looking at a ranging market, because here's your top, here's your bottom, and once you find that out, you're getting too many crossovers and it's not working for you, because this is basically a trending strategy. But also when the market's ranging, you could also play off the bounce of the lower levels of the range or the upper levels. So you want to pay attention to that and be aware. Now, I'm taking a short right here because we got our signal here. All right. And anyway, you got a evening star inside your TK zone right there. So that would be an opportunity for you. And the market doesn't give us much, but it looks like it's trying to. And then it does. Gives us some profit there. and continues to give us some profit, and we got a good trade. So you could have got out here because you broke back above, and you would have made some good profit there. All right, because you entered at the bottom of this morning evening star wick, and you would have traded down to this level here. All right, so let's keep it going. I always want to pay attention. Now, see, I would have caught this bounce. I would have traded this bounce. Now, I also want to be aware of my levels here, because you could be trading right into a support level. So I would mark this level. I'm not going to mark it right now because I don't want to close my full screen up. All right, but I'm showing you that I'm going to pay attention to this level right here, and I don't want to trade into it. Now, this was a trade setup because look what you got. You bounced off of your Tinkinson, and you had the signal because you went above your negative 20 and then dropped right back down. That's showing some strong momentum right there. But look how quickly it died. One good candle and then it died right away. So even if you took that trade, looks like you would have barely made profit. It doesn't look like you would have got much because you're trading into that level again, and you want to be aware of that. Now the market failed to come back up here. All right, so we could be seeing the market starting to change direction, because that's the momentum failure that we're talking about. All right, and now you're getting a thick cloud here again, much like you got here. Remember I told you about the flat thick cloud, and then it starts to roll over, then the market starts to move higher. All right, same thing is developing here, and we're right at a support level. So these are things you want to think about when you're trading this stuff. You don't just go trading the markets without knowing anything. All right, so this is loading up again. I don't know what happened here, so we have to wait on it. All right, there it goes. So now we broke above this level. Let's see what the market's going to do. Now I would have been looking for a short opportunity, but we broke above the Kijinsen also. And now it looks like the market's going the opposite way. Now we broke right back below. And this is a trading opportunity that I'm still going to take. We're above the Kijinsen level, and I usually want to just trade below that Kijinsen level. So I haven't said not to trade above the Kijinsen level because the market has so much volatility at times that it will come above and then go right below. I'm going to pay attention to this right here. Now, when I assess the market, I'm also going to look at my formation. I'm going to look for my 1, 2, 3, 4 formation. I'm going to be 1, 2, 3, 4. So now I think I got a failure swing here, and I'm going to look for the market to move to the upside. So even though we take this trade, let's just say we take that trade, and we didn't have made anything. We'd have got stopped out there. And now you got a crossover. That's bullish. All right. All right, so now look at this big candle bringing us right back to our level. Let's see what we get. I wouldn't have taken this trade, because I like to go below the negative 80, but we're right at that level. And then the market went, so you would be entering here. Now, I'm not taking this trade myself, but that I would say I'd like to see it go below the level, and it didn't go below. And again, another one didn't go below. I wouldn't have taken that trade either. And now the market's not giving us much. Missed an opportunity here. All right, but the market didn't go below. Now it went below. Now it came right back up. So for me, just looking at this, all right, so you got a crossover that's bullish, and I would put an entry level above this green candle, stop loss below the Kijinsen right here. And would we have gotten triggered? And this is what I told you, the market could go right back up and then right back down. We may have gotten triggered, so we could have lost this trade, but a little bit above that level might not have gotten triggered. And then the market breaks back above, and then you can see the crossover. Now I'm going to start trading to the downside. I wouldn't have taken that trade. Now I'm taking this trade short. All right, so if I was trading, I'd be looking to trade short. I'd trade below this level right here with a stop loss slightly above. I like to be at Kijinsen, but if it's too far, I want to be technical about my stop loss. I don't just want to place it where I can afford it. It has to be affordable technically and financially. And then this trade triggers and we're pretty good. We get some profit, good profit on this trade. And then the market continues to drop to the downside. You can see we're starting to lose momentum because we're flattening out here. And then it picks back up and then it's out. So if based on how we were trading, you could have got out there. So we had another good trade. I again want to pay attention to that level there. Now we're above this level again. We're above that negative 20. And now I would be trading short here. All right, so I'd trade short on this level with an entry right below this wick right here and a stop loss slightly above. So a sell stop here, and above this level I would be trading short with a stop loss. And this trade was good. Gave us a good entry again. Kind of risky there. It was tight, right? Now, I know I'm at a support level. All right, I want to pay attention to that. I know I'm at a support level. That would be big to me. That would be major. Now, this is where you could have taken your profit. Now, you want to see how the market reacts. Definitely probably would have taken my profit now for sure. Because when you hit this support level, maybe you want to put a stop loss above the high wick there. And you want to be aware of that support level. And you're not aware of it if you don't mark levels on your chart. That's why we trade levels. We always want to know where our levels are. Now we're back above this level. We're slightly at it now. For me, I'm trading right back into the resistance level. And I wouldn't have taken that trade because, okay, now we broke above. Let's see what happens. I would take this trade, but we're only going to be trading to this point. So is it worth the trade, right? You have to think about that. Is it worth your risks? So you're going to risk, basically, you're going to put an entry below this level. You're going to put a stop loss probably above Kijinsen. Is it worth the risk to trade from there to here? So just because we have a signal, does that mean we should take the trade? Maybe we need to assess what it is. Is it worth it on this trade? We've had some pretty good trades, so we don't want to just be reckless. And that would have worked out. So I guess we should be reckless, right? Okay, so we made it to again, you made it to that level, that support level. And then the market pulled back up. So you can see how this is working for us, working out pretty well. Now you got another bounce off of Tenkan-sen, but we didn't get our signal, right? And then the market tries to pull back up higher. It didn't slightly come above, so I would be watching that. Now we're above my next candle. Let's see what we get. I'm trading short below this wick right here. Again, I'm knowing that I may be trading into support. I mean, yeah, because this was our level and we're right at that point. So I am trading short. We got a rejection here at the Kijinsen with an entry at this point, stop loss above that level. Let's see what we get. Market still seems to be trending to the downside a little bit. Uh-oh. Now we got a crossover. We're probably getting stopped out there, right? There we go. Yeah, so now the crossover, and you probably would have got stopped out here. Yep, this one went a little higher than, and I'm usually at these levels, but I probably would have I would have got out of that trade myself. And then you could see it would have gave us profit right back to the support level. So let's see what the market's doing here, because now we got a bullish crossover. And then we would be trading long. We got our crossover, we're at support. I would probably put an entry order. No, I'm sorry. We don't get that trade. All right? We don't take that trade. We would have been in there already. We should have been in. So we'll just let that go by. We made profit and we're letting it go by. All right, so when we were down here and we got that crossover, we were looking for a bullish trade because the market crossed over here. We went lower here and then we came back up right here. So we would have been looking for our entry at this point. And plus we were at support though, and that was a good thing to be trading long at that point. All right, and then you could see where the profit would have went. Now let's see what else we get. All right, no level there for me to trade really, so I wouldn't be looking for my trade here. And had I entered that trade down here, I probably would have stuck this out because I would have made such good profit. So let's see if we get anything else here. We went below and we didn't really come back above yet. And I don't like that I'm in the middle of my zone, a wide zone at that, my TK zone. And then we continue to drop. So we didn't really come back above yet. So good. We drop. Hopefully we get to our level before we think about taking any kind of trade. Now we're hitting our level and we're below our -80. So we're going to be looking to go long when it shows us that opportunity. And it's not showing it yet. And it's still not showing. Okay. So we wouldn't be trading at all here. We would have missed out on trades. Now you can see we're at that support level and look what the market's doing. So again, talking about how you trade this at support. All right. So if I didn't have Ichimoku on here and I'm trading these support and resistance levels, this support bounce you want to trade, support bounce you want to trade. All right. Now, eventually these levels get broken, and I'll show you how to understand how a range is going to get broken by using this indicator. If you become a member, you can see how to trade that. You probably got stopped out here too if you took the support trade. And now we're looking to go short. All right, so now this pulls up. I'm definitely not shorting this, all right, because I'm not at a level. So we'll see what this does. And it pulls right back. This is telling me to short. Now myself, I definitely am not taking this trade. This is again taking just a trade just because the indicator says to take. So I don't take it because I got such distance between Tenkan-sen and Kijun-sen. So my probabilities aren't real high. And that's the thing about trading. We want to have high probabilities. Now this may work out, but this is a big clamp here, and I'm not going to take that. Most of the time the market's not going to go lower or it's not going to go higher. Now we're starting to get angulation, and now we're just sitting here and the market's not giving us anything. All right, so now this is when we have to assess, is our opportunity still good? So what I do now, and the market's still moving, now we're getting ready to get a crossover, so maybe we could start trading back the other way. All right, so, but now you have to assess the market, and you can see, are we ranging? Are we trending? So it looks like we're still trending a little bit. So now we're looking for the pullback moves. Now that's a big one there. And that pulled right off that support level again. So it looks like Ichimoku's starting to not really help us. At this point, I'm starting to look at it because we got a crossover here, then we got another crossover, and we're getting ready to have another crossover. So this is the point where I start to think, well, Ichimoku may not be helping me here. So I may just start to look at that support and resistance level real strong and try to find my upper level. Maybe I draw a trend line on here, try to figure out what's really going on with the market, and then trade those levels. All right, so that's what we're looking at here. I showed this one for a good 22 minutes already. I want to try to look at a stock real quick, and we'll see how it works with stocks, and then you'll know that it works with cryptos, Forex, and stocks. So let's go to a stock really quickly, and we'll do a couple of trades, and then we'll be out of here. All right, so we're looking at a popular stock. We're going to be looking at Amazon here. All right, so we are where we are right now. We're getting ready to have a TK crossover right here. So this would mean now I'd be looking at all these crossovers myself, but you just had one and you're getting ready to have another one. But you look at the market structure, look at where we are, and try to pay attention to those things. Now we got a TK crossover that's getting ready to be bearish. Let's see what this market does. So we'll try to fly through this one so we don't keep you here all day. I know we just showed you a couple opportunities. So now look at, we got a bearish crossover here. We're going to be looking to trade short. All right, so if you could short sell this Amazon, then you'd be able to take a trade here. And this is where we would be entering the trade. So I'd be putting an entry right here and sell to the downside. So we're just looking at all opportunities. And based on where I would probably put my stop, I'd be stopped out. I'm stopped out. All right, so we got stopped out once. Didn't make any money. Now we got a bullish crossover. So now we're going to be looking for long opportunities. Now, more than likely, this is a resistance level. We'd be looking at the market maybe failing here. So we look to see where we break that previous low. And there it was. You could see a big rejection here. And then you could see this was where we were looking to enter the market. But then we had a big rejection. All right, so this is basically a bull trap right here. Big high because you're out of resistance level right here. Market goes higher, then drops to the downside, breaks the high previous, then goes right back down. This is a big outside bar and a basic bull trap at resistance for breakout traders. So they got stuck in that trade. All right, so now you can see how we gap down here. And we're still going to the downside. Now pull back up to the upside here. Don't really like this opportunity. I mean, we do have bullishness here, but based off of what this is showing me, we would be taking our entry right here with a stop loss a little below. Now your flat Kijun-sen, everything looks flat here. The market looks ugly. You have to weigh your odds. Are you going to take that trade? What's the risk? All right. So based on everything, we are bullish in the market, but it looks like me, the market's flattening out. So we do have a signal here. We'll put an entry above that level, stop loss a little bit below it. And then the market gives us a big play. Now you would also probably know there was earnings that day, and you probably wouldn't have sat in that trade depending on whatever, but you would have made big profit here. You could see what happened. All right, so it signaled to us a move to the upside, like on this candle right here, because we broke above. Then the next candle didn't give us much, and then earnings, it blew to the upside. So we made profit there. Let's continue to watch. So we made so much profit here, we could really, it's easy to now manage your trade, right? And you're getting these indecision candles. I probably put it, at least the lowest I would put my stop losses right here, below this level, right? I made big profit already. So I'd put a stop loss here, see if the market can go any farther. I don't believe it could go much farther. And it would have stopped us out for some profit. And then I said I don't believe it could go much farther, right? Well, look what it's doing. It's going much farther. All right, so now we're going to be looking for long opportunities. I don't like to be this far away from, like Tenkan-sen and Kijun-sen are real far apart. So I really don't like trading in that atmosphere. And I wouldn't have taken this trade here. We didn't go below. So I'm not taking that trade. And the market moves higher. I would have just missed that. And I'm not going to cry over that. And I'm not taking that opportunity either. The market didn't go lower. Now we did. But why is Kijinsen pointing to the upside? So let's watch. Let's go. Now that signals to me to take a long trade. Don't like the way it looks. I would put my entry above this level with a stop loss slightly right here. All right. And we're triggered. Now we got a bearish crossover. I would think about getting out of the market right here, because everything that we're using to get into the market has changed. So we would take our profit here and let the market do what it's going to do. It's showing us bearishness now. All right, but then it goes back with a crossover. You know, it made even more profit, but then it's pulling back. So you're bullish again. Now you're still going to look for see how you got two crossovers right in a row? You're still going to look for your long trades again. Now I'm taking a long right here. All right, right at our level. Not much momentum in the market, you could see that. And we also want to look at this divergence if there's any. All right, and there's slight divergence, but let's let the market roll. We're taking our long right there. And we're still safe, and we make some profit on this trade. All right, we would have had our stop loss below this level here, and we made good profit. All right, so let's see what the market does. And it's giving us some nice trade right here. And then this is where you could think about getting out, right? You could either get out here, or you could, since you got enough profit because you entered way down here, you entered here at about 1176, and you're now at 1304. All right, so what, 2,000 points, and you would have put your stop loss right below this wick. Still trying to give the market a chance to go farther. If it does, that's all. And now we're stopped out. We would have made that profit. Now looking for a long trade again, but we need to be at our levels. Trade went off. We missed that one. Didn't pull back for us. And even if I'm trading without the indicator, I like to get closer to my Tinkinson level here. Now we really broke the level. Now look at this move here. We went lower and then we went back up. I'm not taking a trade, so I didn't take the trade there. Man, now we're inside. This is what we talk about. So I'm going to put an entry right above this level. Big stop loss, so I have to decide if I want to take this stop loss, because it would have to be way down here, and it's really big, so probably wouldn't take this trade. But let's see what we get happening here. This one would have gotten us stopped out had we taken that trade. Now I'm taking this trade right here. Big rejection at Kijinsen. All right, and then we enter at this point. This candle broke above right here. All right, and so we would have entered right here because we broke lower. Then I didn't stop it and we made this candle. So we would enter right above this level. And let's see what the market gives us. So we made back a little bit of what we lost here if we taken this trade. Now we made it back a little bit. And now we're getting ready to cross over. You're bearish crossover. I would have put a stop loss here. I'd probably take my profit because you already crossed over. So what got you in gets you back out. Definitely get the crossover. Then the market's trying to go higher on us, right? We don't know what this market wants to do. Now, crossover. So if we got out of that previous trade and we would have had our stop loss right here, we might have got out of that trade. Could have made a little bit more profit. But you never know. So you play your rules. I wouldn't have got into this trade. I don't like to be that far from Kijinsen and Tenkan-sen together. Good trade though, based off of our rules, not our Williams percent R rules. Basically when we trade. So now we're at our level. I just don't like this distance. Maybe I'm looking at it too tight. No, the distance is big. So I don't like that distance. Starting to get some divergence here. Looks like we're getting to a top here. I would go back. What I would do is go back and see where the all-time high is. You know you're not near it. All right, so you know we're near that. You're continuing to make highs. I'd be careful here. We're bouncing on this level. Let's see what we get. Let's go. There we go. I'm taking that trade. Now, this is the candle that broke, so we wouldn't have been in until this point. We'd be way down here with a stop loss. And then we would have probably got stopped out here. Yes. And now the market bearish break right here. So we're shorting here. Stop loss, I'd have to be up here, but that's kind of big, so you'd have to weigh your odds. Do you want to take it? And at this point, I'm barely making anything. Then I get stopped out. Not a good trade. And then the market crosses over, so we get our crossover. Going to be looking for long opportunities again. All right, big candles like this. Wow. Can't really tell what this market is doing. I'm taking a long trade at this point. I'm going to take a long trade above this rejection candle here, above that wick. I'm in the trade. I'm making profit, and we made some good profit. We also have to realize there were earnings that day, so would we have really taken a trade? All right, so we made profit. And then now let's see what the market does. So I'm getting ready to end this here because I've been quite a while, but you can see how this really works. I think it could really help you if you just, because sometimes you just have to be patient and wait for setups. That's the main thing about trading, guys. You got to be patient traders. You got to be like a sniper waiting for the prey to come. All right, now see, here's a bounce here, but for me, I like to go lower, and I don't really want Tenkan-sen and Kijinsen to be too far apart. All right, so those are some of the things you want to think about as you enter trades. And then look at, see if the market is flat or what. You have no momentum here. It's showing you that because you're in between the TK zone. All right. And both are flat. When Kijinsen and Tenkan-sen's flat, you have no momentum. All right. And now it's trying to build some momentum. So there we go. Starting to build some momentum, and there it goes. Remember, I told you these two together, that's a pretty good trade. Now, they weren't all the way tight there. And you can see the market's just going. So I'm about to end this session, and hopefully this helped you all out. And here we go back below our level. Now I'm getting into a long trade here. So this candle closed above, it went below, closed above. I'd put my entry above this candle with a stop loss below this level. And looks like probably make a little bit of profit here. Kind of weird. Crossover happens. We're still in the market. I really moved my stop loss up tight because I don't know what the market's doing, but now it takes off. So we got another good trade. It was kind of risky here for a little bit. So we got another good opportunity. I'm going to let this run, right? So now when I get indecision candles like that, I usually bring my stop loss up to that level. I want to see if it drops back below the -20. Then I'll bring my stop loss up. Yep. So I'd be out of the market there. So we made profit there. Got some good trades going on. I wouldn't have been in that trade now based off of trading with our indicator. I wouldn't have been in that trade. Now based off of our regular trading, I would have. Now this is a big rejection here. I'm going to put an entry above this level. Look at this cloud trying to roll, not really thick. Little bit of divergence again. I'm putting an entry at that level. And I'm triggered and the trade is on. Making some profit. So we make more profit again on another good trade. And you would have been out of the market in this point somewhere because you came below her and you see you got rejections up here. Put your stop loss below that level. And then you would see you got some profit, made some nice profit. And I wouldn't have been in the trade here. We didn't go below. So we got a lot of good trades here happening. Of course you're going to get some losers because you're not going to win every trade. But the opportunities are good. Now these are opportunities minus the indicator. We could have gotten into a couple other trades that this indicator is not getting into on this Amazon. But we're getting good trades here. Now we're below the level here. Now make sure we get to our point. We're inside our TK zone, which is good. Now we're still below, so let's hold off. Look at the angulation. We're in the trade right here. Stop loss below this candle. This is an outside bar. We're above this. We're going to trade above at this level. And you can see we had good angulation, but now it's time to flatten out a little bit. So let's let it roll. We're stopped out. All right. And now we got a crossover and we're starting to look for opposite direction. Okay. So I'm going to end it here. I think it's been long. You guys are probably like bored with it now. So you see what we got though. So that's the way you trade this. This is a very good indicator to help you, especially when you're trading at levels of support and resistance. Other than that, I'm not just going to take a trade because it goes above the level and comes back down. All right, that's not enough for me. I need to be at a level. That's why I didn't take some of these trades, but the ones we got into were good. We didn't have a lot of losers, and our losers weren't super big. So that's the main thing about trading, is being patient. And then your losers, you don't want to be having bigger losses than your wins. All right, so therefore we could manage our losses with this also. All right, so it wasn't giving us big giant stop losses, and you also have to decide if you can afford a stop loss yourself. So guys, this is how we trade with the Williams percent R, with a 5-period Williams percent R. Okay, so if you want to learn more, you want to learn how we trade other assets, how we trade other strategies with the Williams percent R, and how we trade price action. So we trade price action, support and resistance, fractals. Really would love to show you how we trade fractals with this indicator. I mean, fractal levels and trades are like really one of the top trades that I trade. So if you want to become a member, come on over to my site, FX at One Glance. Got an opportunity to be a lifetime member, get all these videos every week, attend the weekly sessions, become a member, and be in our chat room, our forum, and our weekly webinars, and catch some of these trade alerts, trade setups. And just looking at these setups here, and you see me send it out, you know exactly what to do. All right, so once you start adding fractals into this thing, oh my gosh, it's limitless how you could get some very good opportunities. All right, so hope this helped you out. Even if you don't become a member, I'm sure this will help you out right here. You just have to be patient and follow the strategy. follow that crossover, follow the trade the direction of your crossover. You got a TK crossover, that's bullish, you trade that. Now I also will show you how to trade this without anything on your chart, just using this indicator and fractals, all right, and support and resistance. All right, so support and resistance would be like your trend line, fractals, and maybe pivot points or something like that. All right, so I can show you how to trade that, but become a member, guys, and learn more. If you like that, then hope it helps you out. Until next time, guys, have a great one. God bless. So long.